What you're looking at here is the square of the range, a Gann square, which to construct it from October of 2008, we take that low, we take the high of September 2011, and we project forward a square. Now, how do we create the square? We actually use this one by one down from high. We have a scale that we will let you know. Price unit is 10, which means that this red one by one line descends 10 points per month. The one by one is the often called the 45-degree line, even though it doesn't have to be 45 degrees. It is the main line that you want to look at. And it establishes the rhythm of the market because every other line is a derivative of this line. So this green 1 by 2 line descends at 5 points per month, and this green 2 by 1 line descends at 20 points per month. It's twice the slope. So you define the price unit, the line that defines the relationship between time and price. And, as you go down, you cross the level of the low, and that completes the square in time. So it's very simple, actually, but it looks like a mess of lines, but the reality is it's very simple. And once you get the hang of it, you'll understand why it's valuable. Where I have circles, you can see it's hitting this 1 by 1 line precisely. It's hitting here 1/4 of the way through the square in time, halfway through down in price. So in other words, this is an important focal point, if you will. Everywhere I have the circles, you can see a change in trend. And halfway through the square in time, you can see it suddenly starts to move up. Halfway or 3/4 of the way through this square in time, it found support on the 50% retracement at 1302 and then started to rally on this 1 by 2 line, the green line. And then it got above the 1 by 1 here. My theory is that if it sells off, it'll find support on the 1 by 1. Now, maybe it would go all the way down here. I doubt it. I think there's enough interest that if gold sells off, there will be adequate buying when you get down to the 1 by 1 around 17, looks like around 1778, thereabouts. So if you were to sell off, then you'd bounce off that line and go higher. And my theory is you'll probably rally into January 2022. Now, you can go ahead and write this down and call me a liar later on. I'm not saying it has to do that, but I think it probably will, because I think this 50% retracement here started a big move up. Gann always believed that the midway point on the square of the range was extremely important. You can often get big reversals at that time, and I think it set in motion this rally that you see happening now. So remember, this is a monthly chart. It's not a day chart. So this all plays out over a long period. It's not as though you can trade just using this monthly chart. But it does give you some information about the long-term trend. And if you see it bounce off this line, that would be an information to you that, hey, maybe I should be buying it and looking for it to move up. No guarantee it'll get down here. It might bounce off of this former high here at 1923, 1924 area, and boom, take off and go higher. That could happen. So you can't trade Gann just using the square of the range. It's not the only tool we use. We look at over 50, 100 different charts, and you get a sort of an overall view by looking at all the tools that Gann uses. This is just one tool. So don't get the idea that once you know the Gann square, you can trade with Gann. But I do want to explain how it works so that you get an idea that this is not hocus pocus. Gann believed there's a relationship between time and price, and once you figure out the rhythm of the market, you basically can unlock the doors to the kingdom, if you will. You will make better money trading. Now, a lot of people might question that, oh, okay, this is, something I did and just did the circles here and showed you after the fact. I've been showing this chart for the last 6 months, and when I first started showing it, I showed it to clients down here and told them get ready, it was going to go up. I even showed it back here. I showed it on YouTube over here and told them get ready, this thing's going to new highs. So, you can look back through those YouTube videos and see this exact same chart. I want a track record. I want people to understand this is not, hocus pocus. This is, Gann really does work. So the best way to show people is to actually show the same chart over time, over months and months, and you can see, oh, okay, here's what he said, here's what happened, Maybe we get out to January 2022, I'll still be showing you this chart, and we'll see where it's at. I think it'll be substantially higher. But, right now, I just want to show you that even if gold sells off, I think you should view any sort of near-term sell-off as a buying opportunity. And depending on whether it finds support on the green line or the red line, or maybe this one down here, that determines whether you should buy. So, there's a lot of logic to this. Remember, it's the scale right here is 10 points per month. You can recreate this on your own if you want to go to the effort, or if you have software, it's a lot easier. But the reality is, this is a very useful tool. And, once you get the hang of Gann, be forewarned, you're going to be addicted, because you're going to realize that, hey, there is a rhythm to the market. You should always look at time and price together. And Gann believed that any trade that you do has to be a function of both time and price. In other words, you can't just take the trade based on, oh, we're breaking out here, oh, we got to buy it. That's what a lot of traders would do. Gann would always look at the cycles and say, oh, are we rallying into a cycle, or are we selling off into a cycle? Should I be buying it now, or should I wait another week? That's all important. You can only do that if you're looking at time. So a little heads up for trend followers, you're missing half the equation. Trend following works, but you're missing out on a lot of trades, and maybe your entry point and your exit point is not as good. Because, knowing the cycles is like, the way I say, it's like knowing where the rocks are in the stream. If you know where the rocks are, you don't get wet. If you don't know where the rocks are, you just, by the time you get across the stream, you're totally soaked. So it's not going to it's still the case that when you use Gann, you're probably going to lose money on plenty of trades, but at least you have better odds. That's all I'm saying. It's not perfect. No system is perfect, but if you use it, you'll find that it will be an excellent way to improve your entry points, your exit points. And if anyone tells you don't try to time the market, just tell them to take a hike. Because think about it logically. You have to know when to get in. You have to know when to get out. Timing is important. So I think it's a dodge to say that you shouldn't try to time the market. Buy and hold is a complete fallacy. What you need to do is figure out the ideal time. If you'd known back here that midway through the square of the range is a likely low, you would have probably not got in here. You probably would wait for a breakout above this line here, and then you would have bought in, and then you saw support here, and then you'd be adding to your position all the way up, because you'd know that, hey, we got good support here. And like I said, if you get back here and you bounce, hey, maybe you know that it's time to get back in. Go for the bigger move to dramatic new highs. We already had new highs, but I think we're just getting started in this bull market. So I hope this has been helpful. My name is James Smith. You can find me at my website, www.gannanalysis.net, and hope to hear from you. Register to the website. You'll get some free reports. Good luck in your trading.